All right. Good morning, good afternoon, good evening, wherever you are on this beautiful planet. Welcome to the Inner Circle Live pre-New York session. I'm your host for this morning's session, Benny Allen, along with my awesome partner, Mr. Ryan Carthage. And we're definitely happy and grateful for each and every one of you being here with us this morning as we take a look at the technicals and the fundamentals to see what we can take advantage of in this awesome Forex market. So without further ado, let's make sure that we turn off any and all distractions, grab a pen and paper, take lots of notes, and let's make sure that we participate and engage for this morning's session. So right out the gate, do me a huge favor, drop me a one in the chat if you can hear me loud and clear and you are all ready to go this morning. Beneath, good morning. I see the one coming in. I appreciate it. Reese, good morning. I saw you dropped a EJ chart in the Discord. I appreciate you doing that. Edmund, good morning. All right. So let's jump right in and see what's going on as we close out the month, right? Go over here to Trading Economics front page, right? Eurozone inflation rate falls more than expected. So we are seeing those lagging effects, right? Of all those rate hikes that have been going on since the last forever. And we see the annual inflation rate in the Euro area declined 2.4% in November. It's the lowest level since July 2021, from 2.9% in September and below forecast of 2.7%. Meanwhile, the core rate, which excludes volatile food and energy prices, also cooled to 3.6%, the lowest since April 2022 and below expectations of 3.9%, right? So trying to get that inflation genie back in the bottle. So not all the way there yet. We know that target, they like to be at least 2%. And so that's the goal. That's what the central bankers keep preaching all across the globe. And see, so it's starting to happen, right? There are lagging effects to these rates. It's almost like technical indicators that you use. A lot of them are lagging, right? And so so are the effects of interest rate hikes to combat inflation. Even though, right, a lot of us are still we're feeling it, right? We're like, man, it's $7 for a gallon of orange juice. It is crazy. But as we see that these inflation levels start to come down, eventually we'll start to see some relief. But it does take a long time to happen, and I know it can be painful to consumers, right? I know I'm feeling it, so that's just speaking from my own experience. But hey, the good thing is we have the skill and the ability to trade, so we can kind of hedge it. So at the same time, I'm standing at the pump, filling my gas tank up like, man, this is expensive. I know that I also could trade oil, right? So and make money that way, right? So it is definitely an awesome skill to develop and an awesome skill to have in your back pocket to use. So let's see. Oil extends gains for the third day ahead of the OPEC meeting. So we'll take a look at oil, right? Because we looked at that a while ago. We spotted it on the daily, right, at a key level on the daily, and it's kind of been moving in fits and starts, but it is moving and making gains to the upside. Your falls after CPI reading came through, right? So that makes sense. We've got a drop off in the euro with the inflation rate coming in, and it falls more than expected. We know, hey, okay, possibility of hikes in the future may not occur, right? So that causes that euro to take a dip. All right, so we'll continue to watch out. China manufacturing shrinks more than expected. Continue to have a back and forth with China in the economy, manufacturing sector, real estate sector. German jobless rate unexpectedly rises. Okay, so Germany's seasonally adjusted jobless rate rose to 5.9% in November 2023, up from October's 5.8%, slightly above the market expectations. All right, so feeling the crunch. You got Jamie Dimon from Chase telling everybody, hey, to prepare for a recession. So been a ton of back and forth on that. Some people think we can avoid it. Soft landing, hard landing, all the back and forth. We see it play out on the charts, and we just trade our sweet spots accordingly. Going over to the Forex factory yesterday, let's scroll back a little bit to the 29th. Here in the United States, that was German preliminary CPI. We know about that. In the Eurozone, preliminary GDP, quarter over quarter came through at 5.2%. So still, economy still trucking along here in the United States. Expectation was 5%. And then we had Governor Bailey speaking yesterday, but I think that was like on the 50th anniversary. So nothing too major there. And then China manufacturing PMI, we just saw that on Trading Economics. And then we've got today, scrolling down, we've got Lagarde speaking. And we'll pay close attention to that as we just saw the inflation numbers come through for the Eurozone to see what she says. And then 8:30, we've got core PCE coming through month over month. And we've got unemployment claims. So that's going to be pretty important this morning at 8:30. Friday, if you notice, okay, Friday, it is the first Friday of the month, December 1, but there we do not have non-farm payroll, right? It's going to be the following Friday, the way it's falling. So no non-farm tomorrow, but we do get Canadian employment data. We get ISM manufacturing PMI, and then we've got Chairman Powell speaking tomorrow, so that's going to be pretty important. So that's something to look out for. But we won't have FOMC, the non-farm until next Friday, December 8th is where that's coming through. Okay, so just a heads up on that. So I know some people like to, not so much in this group, but in other places like to trade that non-farm, but it's not going to happen this Friday. So any questions on the fundamentals?
Yeah, Benny. I missed the first half. But in the segment I watched yesterday, the guy basically described them using the 2-year bond yields as a weapon, so then that way they can cut rates. It will, because 2-year is shorter than a 10-year. I mean, they can actually do that, weaponize it.
Yeah, that's just a lot of rhetoric, but really what it is, just another barometer. It's just showing you the economic health and what the sentiment is in regards to the future. You see what I'm saying in regards to what they think the health of the economy and what the economy is going to look like in the future. So it's really just another overall sentiment indicator. And you just look at the 2-year, 10-year, you just look at it as short-term, long-term, short-term, long-term. Where are they placing their money? Are they placing it out long-term? Because they have they're looking at the future, and from a broader perspective, and it looks positive, or is it a quicker turnaround, right? With the 2-year. So it's just another economic, indicator that they use in regards to try to gauge the overall health of the economy. And for that 2-year, 10-year in the United States. And they do it globally with the bonds and the euro, the German bond. So it's just one of many pieces to the puzzle. When these organizations they have their own economic models and indicators that they look at, that's typically one that they take a look at.
Okay,
and they gauge the overall health. Mm-hmm.
And do they look at it separately, or is it that chart that I posted?
They look at that. They'll look at that chart. They'll break it down separately. It just depends on what their philosophy is and their model, okay, and how they engage. So it really depends. So as just like it'll be different for you than it is for other people in regards to what they look at, what they look at versus what you look at in the market. But it is something that they pay close attention to. When you talk about the inverted yield curves and things like that between the 2-year and the 10-year, it is very important because in the past it has been a leading indicator in regards to the potential of a recession, right? So when you get an inverted yield curve, that 2-year crossover that 10-year, and it's prolonged, in the past it has been a good indicator of the possibility of recession ahead. So that's another major reason why they look at that, the 2 and the 10.
Okay,
Mhm.
thank you. Because he did also indicate it until they actually say we're in a recession, like people shouldn't be worried or something like that. So I'm like, yeah.
Yeah, because they have been talking about that for a while. That is, you had a yield curve that was inverted, but we've been able to keep moving right along, so it'll be interesting to see how it plays out going into to 2024, especially with, you're starting to get all the bets coming in that they're going to cut rates a lot earlier in 24 uh, than what they're leading right now. So at least some central bankers. So it's mixed. It's mixed. Yep. Great. That was a great link that you posted yesterday, and I followed it up. Did you see it? I sent you some notes on it.
Nope, I had passed out about 5 seconds.
Oh yeah, 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 yeah. So check it out. I put some pretty decent notes in there for you to take a look at. Mm-hmm. Sure. All right. Any other questions? Oh, we're good. All right. All right. Well, we'll keep it moving right along as we close out the month. All right. Ryan, good morning, sir. How are you?
Good morning, bro. I'm doing well, man. How about yourself?
Doing pretty good. So, what do you have out there fundamentally? Anything that you're paying close attention to this morning?
Only thing, other than what you talked about, bro, there are some Bank of Japan officials floating the narrative out there that they need more time before they can come out of their ultra loose monetary policy. So they're saying what the expectation is, um, it needs to slow down, and they need more time. So they're saying that it shouldn't happen or won't happen in the time frame that um, is currently expected, being that first quarter of the year. Um, so that's the narrative that's being put out there now. So we might see some slight impacts on the yen from that.
Got it. Got it. Yep. So the continued ebbs and flows of the Japanese yen. So we'll see. We'll see what happens. We'll see what happens. Anything else? That's it.
That's it, man. Everything else you covered.
All right. Appreciate it. All right. Well, let's get it rocking and rolling. Clicking over to the DXY. Right. We're getting some bullish movement right to start today. All right. In end of the month, the monthly close. Right. A lot of things can happen, right? So we always trade with caution as we look to close out the month. So we're looking bullish coming into today. And if we go on down here to the 4 hour, just zooming in, and you can see how we pushed down on this 4 hour and took this A out. All right. So if we come in and we drop our fibs, we'll just scan them. It's for to see what we got. We got an 80-20 on the DXY. 80-20 on the DXY on the 4 hour. So even on the DXY, we're getting a reaction out of our 80-20 zone. Right? And we're getting a push up today. So we're getting some corrective action on the dollar. Now we'll see how strong that move is as we're running into a key daily level. And we've got a stochastic on the 4 that's overbought. Okay, so you can see zooming in here on the 1 hour. Scan our fibs again on the 1, and we can see that we've got a nice reversal and a beautiful ABCD wave playing out, right? So we'll see if we can get through that daily level of resistance and maybe head to that D extension right at that 382. All right, so we've got some dollar bulls out right now, early here on a Thursday morning. So we'll see if that continues throughout the day. Any questions on the dollar, on the DXY?
No, sir.
All right, so speaking of that, let's just we'll start out with the dollar Swissy. This one has been crazy, right? It missed on the 1, and then it missed on the 4, and now we're back. Here's the 4 hour move that just never occurred, right? We never got a lift, right? So that pretty much stayed had a trend line on here before. It stayed below your trend line for the most part, moved sideways on us, and then we pushed down. But now we're getting the reaction. So that one never got active for us, right? It just kept, look how it just kept pushing. Once we hit the 127 zone, we got no lift and we just moved, right? So depending on what your confirmations are, if you're limited in, then you got stopped out. If you're waiting for confirmation with trend line breaks, cloud breaks, then that will never really activate it for you, right? So we push down, hit that extension, but now we come to the 1 hour and we have a reaction. Right. So this dollar has been a tricky one, right? It's been moving bearish. The pullbacks have been slight. So maybe it's time, right? But now that we've got this lift on this 1 hour, this reaction, maybe we drop down because we've gotten that low. We drop down to the 15 to 5 to see if we can catch a pullback and a continuation. Okay. All right, so at this monthly level here, all right, so not buying now, but if we can get a pullback and maybe a continuation long, continuation long after some sort of correction, right? Not in the ideal position to buy it now. We got an initial reaction. We know coming off that 1 hour 80-20 zone. See if we can get a pullback on that and see if it wants to give us further evidence that it's moving to the upside. Right? If we get price to move back down, okay. Trend lines drawn. That point, see if you can get evidence that it wants to make a higher low and then continue on and give you a nice ABCD wave. Right? Putting your stop either below the C at that point in time or below your A, because it doesn't take out the A, it has no choice but to go your way. Okay. So nice reaction. All right. We'll see what happens when the rest of the market opens this morning and see if we can get a sustained move, a correction and a sustained move to the upside to chase that 382. So this is the 1 hour. $38.2. Okay. So that's that. Any questions on that dollar Swiss? No?
No, sir.
All right. Appreciate it. So let's go. There were two. That I posted last night that it started to pick up and then we just dropped off, right, with that news this morning. So those did not really get going, right? So here's our 118, 127 zone, price settled, and then we tailed off with the news, right, from the fundamentals today. We'll see. This needs to get adjusted. So those, this one and the other one, did not play out, right? We got a little bit of a bump and then we corrected back to the downside, right? That one fell off on the 30-minute, right? So again, if you're limited in on that one, that's a 16 pip loss there. If you were waiting for solid breaks, you know, however your confirmations are, if you use those additional confirmations, you might not have gotten it to where you took the trade, but that's where we are. So that one pushed straight down on the Euro Swissy. Yep, so we got an extension hit there. I'm just checking. This was an older play that we had on an 80-20 that went long for us. Just checking through the rest of these charts to see what we had going, right? Here was the 1 hour, the most recent one to the downside, right? So we came through two TP levels on this, right? This is one that we took in the past. This one is moving through TP2. And so what we were looking for on that lower time frame was a correction, right, off that TP2 level. But it continued to push down further. So we'll continue to keep an eye on it. So depending on, some of you may be still in this one to the downside. I'm not, which is why I entertained that Euro Swissy on the 30-minute chart. But it's continuing to push lower. So we'll see. We'll continue to keep an eye on that to see if it holds within our AB boundary. Any questions on the Euro Swiss?
No, sir.
All right, real quick. The pound Swissy look like these Swiss pairs are lining up. We're lining up nice. With that Euro news, we got pushed. This one here, that's a bummer. We got wicked out. That one broke pretty nice, but then we just died, right, on the pound Swiss. So that's a 16 pip loss there. This one I actually got hit on that one. So we've got a lower low now. So we need to adjust that trend line like so. So that one is a miss. Not. And just going back through the higher time frames, right? So here's a reaction here off of 8020. I didn't even Brian, I don't know if you did, but I didn't even pay attention to this fib here to the upside.
No, I
Anybody
totally
pay
missed
attention to that? Yeah. So in your lower time frame, this is where we were looking for that correction off that impulse move down, but that's it's bouncing around like crazy, but we'll have to watch out for that one because that might be a continuation. So we'll see. We'll see what happens there on the pound Swiss. But that 30-minute, that one missed. That one took off pretty decent, then it missed and moved back down. So that's a loss there. We chopped that one up. And going over to this NZD Swissy on the 15. Take a look and see what we have going on. So this one is still floating around the zone here. So we got a swing and then we move back down, but that one technically is still in play. So keep an eye on this one. Cause that one's this one's hovering around. All right, so just keeping our eyes on these Swissy pairs because they all seem to be lining up around the same time. The news on the euro with that inflation got us to push further down on those other two pairs, but I want to keep an eye on this one here. See different pair out of that Eurozone area, so we didn't get it on the pound and the euro Swissy, but this NZD Swissy is kind of hanging around. So let's keep an eye on this one here. Appreciate the heads up on this one, Ryan. And
no doubt. Overall, my bias on this one is bullish. So it kind of falls in line with me looking to add a position to it. So
yeah, decent area to add for a continuation potentially. So let's see. Right, what happens there? Okay, so we've got we can get it going. 30 pips or so. 40. Okay, to TP2. All right, so let's keep an eye out on that. All right, so we got our TP1 there. TP2. So right at the edge of that zone. Super choppy. Somebody's going to win here, either the Bulls or the Bears. Right? It's in our zone. Okay. And for the most part, these have been playing out pretty good for us. So have you all been playing these setups? Yes, no? Anybody having success? Good percentage of them have been going to the profit level. Yeah, the new platform one I gotta use too. Use two, gotta raise that. This new platform I'm on, I gotta get used to. What platform are you on, Joy?
So KOT moved from
Oh, okay.
MetaTraders to Trade Locker, and I'm hating.
Oh, they did.
Yeah.
What was the reason? Any reason?
Out with the old, in with the new. And whatever it is, I think this platform convinced them of something, because at least some platforms still have MetaTrader, and in the website they got rid of MetaTrader, period. And this platform is so buggy. I put my TP in a couple of plays, and I came back and it was already closed. I'm like, yeah, I got that. Man, it only gave me like about 2 pips because it was a defaulted high-low price, and that's what it put my TP as.
Wow.
Yeah.
Wow. When did they make that move?
So I wasn't paying attention, and apparently it's been over the last 3 months. It was in beta for the last year, and it was so buggy. I couldn't even practice in the demo, so I didn't even bother with it, and I didn't pay attention that they was actually moving to this whole platform, and I wasn't paying attention. So they did it the 7th, right before Thanksgiving. So I was down. So I couldn't do nothing. My trades was still working in MetaTrader 4. But what happened was my accounts had some problems. And by the time they did it, like a lot of my stuff, my stop loss was moved. It was crazy. So I kind
Oh,
of
wow.
I'm about to pull from them.
Yeah. Yeah, you gotta do what you gotta do. Do what you gotta do. Yep. So appreciate the update on that. I didn't know either. I didn't know either that they had made some changes.
They've been trying to go live since when I look back at the emails at the 2014 emails. They've been doing this since July, apparently. And then they finally went live November 17th.
Okay. Got it. Got it. Yeah, so keep us updated on that. Well, you say he's probably about to make a move, so I guess that's the update. so yeah, sometimes you gotta do what you gotta do until they get their act together. All right. So that's that. Any questions on this NZD Swissy? Nope. All right. Let me see something here. That was choppy, going back and forth. Pretty much ranging. Okay. So we'll see how that plays out. Ryan, any other pairs that you have your eyes on right now?
No, I'm just I'm sitting tight right now with the ones that I'm in.
Okay.
Those yen crosses, that NZD Swiss, the EuroCAD, Aussie CAD, and I'm still showing that Euro NZD. So yeah, I'm just sitting tight right now.
Okay. Cool. So let's move up. That's kind of how I am. Not too much. Besides those ones that I dropped in last night that didn't go. Pretty much the same ones as we look to close out the month. I want to check in on this Aussie dollar, as this dollar is bouncing around a bit, but that latest move should play in favor on this one. Yeah. So moving pretty decent. So here's that 80-20 in the Aussie dollar on the 1 hour. that we mapped out. So that dollar bullishness coming in, to this morning is helping us trade out. As you can see, right? All the times they take time, right? But I'm not worried about the path in which it takes to get there. How many times it goes into a range or how choppy it may be. I just needed to get there. Right. I don't control all of that. That's just my approach to the market. I don't control all of that. I'm going to trade the zone. I'm going to trade the zone, the sweet spot, and then I'm going to let it head to the target. Right. And how long it's going to take, not in my control at all. Right. Not in my control at all. So this one is moving down, making steady progress. Right. So off that level, 61 pips so far. Anybody active in this Aussie dollar trade? Yeah.
My bad.
Okay.
Yep, I'm in that one. I'm in that one too. And euro dollar.
Yep. You said the euro dollar?
Yep.
Okay. Joy 66.20. Okay. All right. Oh, so just above resistance, right? So that's moving in your favor now. Reese, absolutely. Right. Being patient, right? We'll click over to this this euro CAD for sure. It is slowly but surely making its way, right? So you look here at the higher time frame, how we had this drawn out, right? Just really right ranging, but you can make plays on that. Here we are on this lower time frame on the 4 hour, and we're starting to get that move down. And that's where you have to be patient, use proper risk management. Don't be so quick to jump, in and out of trades, right? At least if you're gonna trade these setups. And you can see, right? So this move, has come down what? Over 152 pips. Right. So yes, you're gonna take some losses, right? If you were involved, if you just limited in on those two, the Euro Swissy, Pound Swissy, 16 pip losses, right? But those get gobbled up, right, by the larger moves that we're playing. Right. So you just have to stay patient and let the market do what it's gonna do, right? Trade the zone. So thanks for bringing that one up, Reese. That one is still active. It's taking forever. Sometimes you let that running, right? And when your risk management is good, sometimes you're just like, man, oh, this one is still going. I forgot all about this one, right? It's making its way down, right? And that's the beauty of swing trading. So that's the Euro CAD setup there. Any questions on this Euro CAD, right? So as we close out the month, just a lot of trades that we've been involved in for a while, just continuing to make moves, continuing to accumulate. No. All right. So let's move over. I want to take a look at this Euro JPY. This Euro JPY. Respotted it on the 1. Maybe setting up for a correction. So we'll take a look at the overall move that we're trading. And then we'll look at this. We'll look at the 1 hour setup there. So here we are, right? Just continuing to move down towards the target, right? That's a 431 pip target. So it's making its way, right? And when we're swing trading these setups, again, you just have to be patient. Don't be so quick to jump out. You already know what your risk is. Hey, I'm in at 1%, 0.5%, 2%. Some people might be trading 3%, right? Even if you're trading at 3% and you're trading strictly 80/20s, anybody that's been with us for a while in this group, have we ever lost 33 80/20s in a row?
No.
Okay. If you were trading at 5% and you were trading strictly 80/20s, have we ever lost 20 80/20s in a row? No. Right.
Nope.
And this is why Ryan always talks about you got to do the work. you got to collect the data, because you start out trading super small, your risk 0.5%, 1%, 0.25%. But as you accumulate the data and the data is what's going to give you the confidence, right, to be able to eventually scale up, right, and take a little bit of higher risk, right. So as you're making these plays, and that's why we decided towards the back half of this year, when we look back at our notes and what we're teaching, is just like, how can we help people become, consistently profitable faster, right? A lot sooner than later. Okay, well, let's drill down the one home run move, right? Let's drill down on this, right? So they get this down packed, what to look for, right? In this one setup, and how to make plays through multiple time frames off of this one setup. So one setup through through multiple currency pairs, multiple asset classes. Can you find it consistently through all time frames? If we can get folks focused on that, then we feel like the success rate goes through the roof. Is that making sense? Yes, no? I want to make sure we're clear on that. Yes? Okay. All right. So the more confidence you have, the more consistency you get, the more you're able to, the more confidence you'll build in being able to scale up. Okay. But it takes a while to get there. And that's what Ryan talks about all the time. Okay. But you got to be able to hang in there on these positions. Okay. And have confidence in yourself and your ability. All right. So there we are. That's making us a decent impulse leg, making a move. We look here on this 1 hour. I'm going to clean this up. Here we are on the 1, making the same move. Okay. So you got the larger move on the 4. Here's the smaller wave, similar price action. All right. So I am going to clean this up. I'm going to take this off. I'm going to take the smart analytics off like this. And we're going to look at the situation and see how Reese is seeing it, where you saw the higher time frame and how large that move is. We understand that the market moves in waves. So here's a potential 80-20, and it's already reacting, right? We've got to get through this 161.24 level. But this is what Reese posted in the Discord, right? Am I correct in that, Reese? This is it. This is it, right? On this level. I think that's what I saw. Yep. Yep. All right. So here's the setup. Okay. Here's your stop. Right? At least this is how we draw it up. If you run it tighter, that's all depending. It all depends on your trade plan and what you like to do. All right. That's in your control. All right. Here's our level. So there. Okay. Here's our TP1. It's our TP2. It's like so. Okay. So off that entry, got 64, 65 pips. You got a TP1 at 113, TP2 at 160. Now, when you get these moves like this, right? It's a 1 hour chart, pretty sizable, and it's already taken off. So you have a decent reaction to the upside there. Right? So you may say, you know what? I'm going to, right? It's coming off here this is everywhere, Rize. So here's that move occurring on the 5. So I'm gonna clear this out. here we are at that level. So what we could do, because we know to that 1 hour TP1, we still have quite a ways to go. And this is on this is on a 5 minute. So it's taking off. So what you can say is, right, it's the same thing over and over again. Since I'm not in on that initial move to the upside, can I get a correction? Can I get a higher low to form? Here's a low, higher low. And then can I get involved with it? I don't have to be in a rush. Okay. The trade takes off, drop down to the lower time frame, see if you can catch a pullback. Whether it's the 5 minute, whether it's the 15 minute. Same concept. This is playing out here on the 15 too. So we've identified it off the 1. So we'll use those levels. There we go. Okay. So this is your 15. All right, we're running into some structure there. Okay. And some people, right, who trade, this is all they do. Right? They don't get in right at the 80, right at that level with that 80-20 level. They don't put a trade in. They wait to see if the trade is going to react, and then they look to play the pullback. Okay? Everybody follow me on that? Drop me a 1 in the chat. That's very important, right? Different approaches that we teach to the market and how to enter trades. Okay? If you're not the type of person to say, well, I don't want to limit in at the level, then just wait for the trade to take off and pull back. If the market moves in waves, oftentimes it will pull back and give you an opportunity to get into the trade, right? So that's another confirmation for you. Hey, I need this trade I need to see this react, at that 80-20 zone. And if it, I gotta start running all over the place. And if it reacts, then I'll look to make the play off the pullback, right? And at that point, I'm either putting my stop below the A or below my C, because if it settles in our buy zone, it's going to create a swing low anyway, right? So then no matter how you look at it, upside down, sideways, doesn't matter. It becomes the same scenario. It becomes the same approach. And that's how you get consistent, right? So either below the C or below the A, you work your risk management out off of your stop loss, and you see if you can get to those targets, right? We're not here to overcomplicate things. Okay, not here to overcomplicate things. It's the same stuff over and over and over again. It's boring, but it works. All right. Okay. Any questions on this EJ play?
No, sir.
All right. Let me see. I want to look at this dollar yen on the 4 as this dollar is picking up some strength. I know this one has been going back and forth, making some progress, but we're getting corrections, right? So here we are. Look at that. Just give it time. Right? Now we're getting a slight correction. Just give it time. Right? Look at that move, right? Ever since we've broken that inner trend line and we've come down, okay, we're at the lowest point, almost 400 pips, everybody. Now we're pulling back, right? 289. But it's just not going to drop unless it's a major fundamental occurrence. The market is never just, the bottom's just not going to fall out. right? Just the ebbs and flows of the market, okay? Now we're getting a pullback, okay? Here we are. Look at this higher time frame. We talked about the 150 level, right? Look at the technical levels. Look at that. Again, it respected it. Right? It respected it. Look at that. That's out the high. That's 530. You all are seeing it. Make the play. Have confidence in yourself and your ability. And the only way you do that is to rep it out. Okay. Here we are on a 1. Here's that U-turn. We're seeing that strength. So this is just a zoomed in view, right, of what's going on. Here was a previous 80-20 that we played. Look at that, right? So many different ways to skin a cat, right? Within the framework that we teach. Look at that. There, boom. Okay. Now look, are we going to get a pullback to a sweet spot level and then continue? Right? Immediate reversal off the beat boundary. If we push, so now the question becomes, right? If I'm short dollar yen off that 4-hour play and I get a pullback to this level, if I'm holding firm on dollar bearishness, right? More and more talk about the Fed's holding rates where they are, no further hikes. Then I can use this 1-hour chart or my 15-minute chart. And those pullbacks that occur, they come into my sweet spot to add to my position. Okay. If the 649 pip play is going to work out, it's going to give us opportunities to add to the position. That's why we don't have to put the house on a trade when we initially take it, because they're larger moves. These aren't 5 and 10 pip moves, right? Take this out now. Okay. These aren't 5 and 10 pip moves. So if we get that pullback there, hey, my bias is still bearish on this dollar. I look to see further dollar declines, then I'm going to look to add to that position until we get all the way down, right? To that target, right? So this is this 4-hour, 38.2. Okay. Now, right, the beauty of what we do is that I don't care if this trade moves every which way from Sunday. All I care about is that it eventually makes its way to my target. Any questions on the dollar yen? No, right?
No, sir.
Okay. Okay. And then you have to make the decision, right? Do I want to play like here? Okay. Yes, you can have a long-term short, right? Off that higher time frame and take a play on an 80-20. That's the freedom of the Forex market, right? And what we do, right? You can turn, yes, I can take advantage of that if I want to, or I can pass on that. Or I could say, you know what? I'm only looking to add to my short position. I don't want to play 80-20s. I'm looking for the straight sell, dollar weakness. So if it pulls back to my sweet spot, still follow your rules. If it pulls back to my sweet spot for the sell, then I'll add to the position. If it doesn't, like in this case, then I won't play it. I'll wait for the next fit. Right? Some of you, okay, follow me closely, may say, off that 4-hour chart, I've got 649 pips of selling opportunity. Okay? That's what that represents, that target. So you may say, what I'm going to do is I'm going to trade ABCDs, take my money. Like, for example, okay, let me pull this out. You may say, okay, I've got 649 pips, a selling opportunity. So what I'm going to do is, my trend for the meantime right now is down. And Benny, I like trading with the trend and it's down, but I like eating the elephant one bite at a time. I don't want to hold for all 649 pips. So what I'll do is when I get a pullback on a 1 hour or a 15, and it pulls back to the zone, I'm going to trade that ABCD move to the downside. And if it pulls back to my 61.8 or my 786, like it did here, then on this particular fib, my take profit would be here at the 127. So this is my play right here. A, B, C, D. I'm out. Got my money. All right. So if we play it, at least how I set up my trade plan on these moves, I like it at the 61.8 and the 786 to set levels and potential trades. That's 141. $166. I'm out. Now, this next fib, if it pulls back to my sweet spots, I'll trade the next ABCD wave. Question. Based on my rules of a 61.8, 786 or higher, did this next fib land in my sweet spot zone to sell it? Yes or no? No. All right. So I don't take that trade. I've got 649 pips of selling opportunity. I don't take that trade. Why? It didn't meet my rules. It didn't come in at a 61.8. It didn't come in at a 786 or higher before hitting its target. It didn't. So that's one that I have to give that one up. It didn't meet my rules. Now, on this next one, if I'm trading with this current downtrend, I can set myself up to, if it comes in my zone, right? Right. Say it comes in and hits my 61.8 and then it continues down. Well, my TP is going to be the 1.618, the extension. So I take that trade, right? Stops above the A. 115 pips, call it. TP level is 343. Right? I take that trade. Hits the D extension. I look for the next setup. Everybody follow me on that. Drop me a 2 in the chat. All right. So just some things to think about. Okay. The Fibonacci framework is beautiful. It helps you determine the direction, okay, of your trade, your sweet spot zones to trade, where to put your stop, where to put your take profit, how to figure out your risk management. It's all there within that AB boundary. It's all there. Okay. Continue to put the work in. It's all there for you, right? So I just wanted to make sure we cover that for today. So all your foundation is understanding what zones to trade, right? What zones am I going to trade? Where are my sweet spots? We know we got the 80-20, right? And you can see how playing an 80-20 off of a higher time frame could lead you, right, into playing a reversal, a trend reversal, and a huge move to the downside, 649 pips of selling opportunity. How do I want to approach it? One big swing, one big position trade. Do I want to add to it? Do I want to take profit? Eat the elephant one bite at a time. However you want to do it, it's all there for you. Where you really don't need anything else. Any questions? No?
No, sir.
You're welcome, Michelle. Appreciate the feedback. Time to time, we gotta go back, right? Go back to the drawing board and the foundation and the fundamentals. It's always good, right? Appreciate that. Okay. So think about that. I've used a higher time frame. I've set my target. Okay. I've set my target. And so far, so good. Okay. All right. So that's that. Oh man, shoot, we're right at the 7:30 mark. Ryan, any you posted, I think you just did something on Euro USD, right?
Yes, sir.
What time frame we're talking about?
So we got a 1 hour swing, but we're waiting on a pullback. On the 15th, we have an active 80-20 that would lead us into that entry on the 1 hour.
Okay. This is the 15. Where'd my 1 hour chart go? Hold on, they got me all messed up here. All right. So talk to me. What we got?
80-20 ground rate capital fib, yeah.
Yep. That 80-20 is still, look at that.
We covered
Didn't
that
hit that
Saturday.
extension. We did. We did indeed. All right. So that's the 1 hour.
Wait for a pullback.
Okay.
So I'm not taking an entry now. I'm waiting for price to pull back to around that 109, 655-ish level.
Okay.
Shy of that. So that's what I'm looking at for the swing. Yeah. And so we drop down to 15. We got a 80-20 coming off the high that sets us up for that entry. You're on the sub fib off the top.
I'm gonna just clear it out because that's that one that got away.
Yeah.
But the higher time frame one is playing out. So you're looking for that correction, right?
Yep.
All right.
So let's see if we can. I haven't posted that one yet, but
yeah. Let's see if we can get it. All right. So we're looking for correction, right? And then a move back down. This was gonna be interesting, right? With the inflation data coming out.
Yeah, it will be.
Yeah, this is gonna be an interesting one to watch. But we're getting that larger move that we talked about on Saturday. Like you said, it's a matter of that this price pulling back now. Then a continuation to the downside. I like it. Appreciate you sharing it.
No doubt.
All right. So that's it. That's all I have. Any oh, I'm sorry. I have to that's not all I have. I'm looking at my notes here. I want to take a look at crude oil. And it just shows you like how, being patient, right? Not too long ago, everybody, we were right there at that 72.51, right? You guys remember? Look at that. Right, now we got this wave to the upside. So let's see if we can break through that 79.21 level. But that level was correct, right? We found buyers there. We made a higher low and we're pushing up. So now it's just a matter, can we get through that daily level there? That's a strong level, right? So let's see if we can continue to push. So that's oil. I wanted to take a look at gold. I was on surfing on YouTube, and a lot of traders got ate up trying to short it. Tried to short it. Tried to get short too soon. Right? But look at the ABCD wave playing out. It's running right into that level that we talked about, that daily level. Look at where we are. Did we nail it or did we nail it? Clean this up. 80-20. 80-20. All within that wave, right? Give you guys some clarity on this. $20.43.79. All right, Joy. See if we can pull that one off. But here's the bottom line, everybody. The market moves in waves. It is undeniable. It moves in waves. No dispute now. Questions on gold?
No, sir.
All right. All right. That's where we are. Quick look in at the S&P 500. Here's the daily. Monster move. Here's our 4. Super extended. All right. Right in that zone. On the 4. Okay. Hardly any type of correction on that S&P. See what happens. See what happens. Any questions on anything that we covered today? Ryan, anything before we wrap things up?
No, sir. Great session, bro. Appreciate you, man.
All right. Hey, everybody, have a good day. Keep your eyes on the Discord. We got things coming through. I hope you guys love some of the videos that we're posting. Ryan is doing an awesome job at getting that data out to everybody in a super cool way. So again, keep your eyes posted on the Discord. And hey, we'll be right back here tomorrow, 6:30 a.m. Eastern Standard Time for another session, wrapping things up on a Friday. Have a good day, everybody. Thank you.